everybody. Welcome to our fourth episode of your Friday Flash. I am Shannon, your title girl, serving Pierce and South King counties. And with me today is Lori Cantu. She is your concierge for all of your title and escrow needs, and she's serving King County. And today, Lori is going to introduce our very special guest.
Well, thank you, Shannon. And I would like to welcome Kyle Williams. He's with IPX 1031. He is with our company. He's a sister company to Fidelity National Title and Escrow and Fidelity National Financial. So thank you for being on, Kyle. We really appreciate you taking the time to share with us about IPX 1031s.
Thank you, Lori. Thank you, Shannon. I'm excited to be here.
Well, Kyle, can you tell us what is a 1031 exchange?
Yeah, sure. So a 1031 exchange allows an investor to sell an investment property. In many cases, this could be a rental, it could be retail, even like 30-year leases, but any property held for business or investment purposes. 1031 exchange allows them to sell that property and actually defer all the federal taxes when they purchase something similar, what we would call like kind, meaning other property held for business or investment use. So like a common scenario might be someone selling a rental and they've owned it for a long period of time. They don't want to pay the taxes on it right now, so they're going to do a 1031 exchange and actually buy something new and use all the equity, not just the after-tax equity, to reinvest. So if someone asks me what I do and I say 1031s, inevitably they'll say, well, what is that exactly? I'll say it's a lot like escrow. When someone sells an investment property, a qualified intermediary, someone like IPX 1031, will hold those funds in a segregated commercial bank account until they're ready to purchase. There's a couple timelines that people have to follow with 1031s. So one of them is the identification period, and that's 45 days. So from close of escrow on your sale, when you sell your rental, you have 45 days to identify new investment property to purchase. Ultimately, you have 180 days to close on that investment property. So those are the two time frames to remember: 45 days to identify, 180 days to close. And really, most 1031s are fairly straightforward. Investors just need to do two things really at the end of the day: buy for equal or greater value and reinvest their proceeds. So if you're selling a rental for, say, $500,000 that you've owned for 20 years and you've got a lot of equity in it, most of it's equity at this point, you probably want to move up to something that's worth $600,000 or $700,000. Maybe you find a duplex and increase your cash flow. But any number of reasons allows you to defer the federal taxes. So your dollars go a lot further for you when you don't pay the federal taxes.
Smart.
I just thought of a question. Kyle, can you tell everybody how much does it cost to do a 1031 exchange?
So it actually varies depending on who you work with. Our fees as part of Fidelity National Financial are super competitive. Most exchanges are less than $1,000, and that would cover the sale and one purchase. Ultimately, it depends on who you work with. One thing that I would like to say, and Lori, you led off with this, is we are the exchange division for Fidelity National Financial. That's super important because 1031s are entirely unregulated. And literally billions of dollars have been lost in 1031s by other exchange companies. So there's a lot of great exchange companies out there, but we tell investors, make sure you know who you're working with, look at insurance policies, make sure that they have protections in place, because if you're working outside of the Fidelity National Financial family, you really need to look into that.
Great. And then approximately how much does it save someone in taxes?
So great question, Lori. Ultimately, it comes down to how long they've owned the property for. Adjusted gross income can factor into that, but it's not uncommon for us to see collective tax rates in the Puget Sound area of 20 to 25% collectively, because
Wow.
there's three taxes that people will look at. Everyone knows about capital gains, big one, tax at 15 to 20%. But one that I would call the hidden tax, because a lot of people don't know about it until they've been hit by it, is unrecognized gain due to depreciation. So the depreciation that people write off on their investment properties, that's taxed at 25%, an even higher rate than capital gains. And lastly, we have the new net investment income tax. People also notice the affordable healthcare tax of 3.8%. So yeah, collectively, if people have jobs, if they've owned a property for any length of time in the Puget Sound area, there's a good chance that when they sell that investment property and don't do a 1031 exchange, they're going to pay 20 to 25% in taxes. But ultimately, we cannot be your tax advisor. So every client needs to talk to their CPA and make sure that an exchange works for them and is the right thing to do.
So Kyle, if myself or Lori has any real estate agents or investors or folks that are interested in utilizing 1031 exchanges, what types of marketing would you suggest for them to target a 1031 either property or client?
Sure. Great question, Shannon. So I would say like marketing 101 tip for agents and brokers that want to grow their business, solicit and talk to landowners. Landowners have no idea that they can do exchanges in many cases. So we've done a ton of exchanges for landowners over the years. And they'll say, Kyle, I had no idea. I would have done this a long time ago had I known that I could actually exchange this raw land into something where I could get income on it, something where I could take depreciation, that awesome tax benefit of owning investment real estate. So yeah, talk to landowners. And I know that you guys can get lists of landowners and farming tools and everything that you guys have. So that's awesome for you guys to help agents and brokers that way.
Would land and, say, for example, an apartment multi-unit be considered a like for like for somebody?
Yeah, absolutely. As long as it's held for business or investment use, it's like kind. So really the IRS would see no difference between 5,000 acres of raw land in Tennessee and the Space Needle. They're both like kind because they're both held for business or investment use. And because 1031 is federal, you can actually exchange between all 50 states and even the Virgin Islands, Guam, under certain circumstances. So yeah, 1031 is a really neat thing if people want to diversify outside Washington or even come up here. We see a ton of people exchange into Washington because they want to take advantage of the real estate market up here.
Wow, this is great information. Thank you so much, Kyle. So if any realtors or lenders or investors want to have some time with you, are you local or where are you?
Yeah, absolutely. Our office is in Bellevue. I oversee sales for the state. So I go to Eastern Washington on occasion, up to Bellingham, down south as well. So if once we pick things back up, if they want to set up a lunch and learn or clock hour class with you guys, I'd be more than happy to do that. And in the meantime, we can still do Zoom webinars and stuff as well.
Yes, we can.
And we will make sure too to put Kyle's contact information in the comments section of the video. So if anybody wants to reach out to Kyle or direct message him, you'll be able to do so with that information.
Absolutely. Well, thank you so much. Kyle, is there any questions that you get frequently asked by realtors about 1031s or clients?
So one, a lot of agents and brokers want to know, how can I use 1031 to grow my business? And I'll say, yeah, you need to talk to Lori, talk to Shannon, get a list of landowners, talk to landowners because they're the ones who love to do exchanges. My one tip for exchangers would be start looking for property as soon as you list yours for sale. Start looking for replacement property. The exchange has to be set up before you close on your sale. So we tell people, yeah, as soon as you're under contract, start looking for new property. Don't wait until the last minute to look because you're under those timelines to identify and close on new property. So start looking for new property sooner rather than later.
Right. Because you can't do it after the transaction is closed.
Correct. Yeah, if the client is already closed on their sale, it's too late. Because in a 1031 exchange, as a qualified intermediary, our job is to control and what we'd call take title to funds. So if the client ever has control of funds, meaning they've closed, they have control of funds, so they can't set up an exchange at that point. So exchanges need to be set up in advance of closing. Ideally, once you're under contract and escrow set up.
So you heard it here, you guys, all about 1031 exchanges on your Friday Flash.
Thank you so very much. Have a wonderful weekend, everyone. Take care. Thank you, Kyle.
Bye. Bye.